It is a popular fact that real estate poses less risk and volatility when compared to all other investment classes. I'm talking about stocks, bonds, cryptocurrency, you name it. Of all these investments, real estate is one that is the least risky and least volatile, but that is if you know how to do it right. So in this video, I'm going to be talking about what determines if your real estate investment is a good one or a bad one. I am Yeni of La Vida, and I'm not just into the business of selling real estate, but helping you make the best real estate investment decisions that you should be proud of for years to come. Even though it's quite true that real estate is less risky compared to other type of investments and asset class, one thing you should know is if you do real estate wrong, you could lose a lot of money, because real estate has to do with a lot of money. It's not like stock where you can invest in little amounts. Real estate has to do with a lot of money. So if you don't follow these steps carefully and weigh out the options, you are most likely to lose your money. So like I said, in this video, we'll be looking at 5 key factors in which you should look into before investing in any form of real estate, before undertaking any form of real estate. This 5 is what will determine if your investment is a good one or a bad one. The first factor you should consider is the security of your capital. Yes, just like I said, real estate has to do with a lot of money. There's a lot of capital involved in real estate. That's if you are not doing it in bits. If you are doing it in actual way, like buying a land or buying a house, it is a huge amount of capital. So the first thing you should be looking at is the security of your capital. That's most important. Is your capital safe? What you're investing in, is it the right place to invest in terms of ownership, in terms of security, in terms of you doing your due diligence? Is it the right place? A good example I'm going to give in is a story about a very popular developer in Lagos State that wanted to invest in a particular area in Lagos, somewhere in Lagos on the island, and the place they bought happened to have been used as a collateral for a loan in which the previous owner had taken. So they didn't check all this, they didn't know all this. The owner has given them the documents telling them, oh, it's good, it doesn't have any issues. It's months after they wanted to start bidding. In fact, they've started construction already. Then AMCON came to the site and then locked up the site, saying that site has been overtaken by them since the owner failed to pay. Now this is what we talk about security of capital. How safe is your capital? That's why it is important to do your due diligence when investing in real estate, because that is the only way to know if your capital is safe or not. The second factor you should consider is the stability of income. Now I'll break this into 2 parts. The first is appreciation, and the second is in form of rent or fee you get for short let. So let's talk about appreciation first. In terms of stability of your income, how well would where you're investing in appreciate in value? How fast will it appreciate in value? What's the demand like? Now, on the rent aspect, if it is a place you are buying to rent out or use for short let, what determines how well income comes in? What determines the stability? Is it a place where you can easily find people to rent it out to or to give it out to for short let, or is it a place where before you even find one tenant, you're going to take about 3 to 6 months? So one thing you should be looking at is the stability of your income in these investments. How much money can you be getting? In what duration? If you are going to be using the property for short let, how soon? What's the turnover ratio? Like, how long would you have to wait to find people to take it for short let? Is it a place where you only get to give out for short let during festive period, or is it a place where you get to give out every weekend? Like there's like sure inflow of customers and return customers every weekend. So these are things you need to check before you invest, the stability of your income. Now move to number 3. Now you've done your due diligence and you know that your capital is secure, there's no problem with it, and you can always get steady flow of income. There's stability in income. The third factor you should be looking out for now is the liquidity of your capital. If you decide to sell out this property, how soon can you sell it? How fast can you sell it? Can you sell it as fast as you got it, or it's going to take you years to find a buyer for it? That is one thing you should be looking at. Let's say by chance you just need to turn over the property, sell it and get your money from it. How soon can you do this? So this is one thing you should always put in your checklist when looking to invest in real estate in Lagos. The fourth factor is ease of disposal. So ease of disposal is quite different from liquidity of capital. You might be able to sell something very fast and not find it very easy to sell it. So the ease of disposal is what it will take you to be able to give out this property onto the next owner. Is where to take you to pass it on, to sell it. So So what's the ease of disposal like? Is it that you have to first get in touch with who sold it with you first before you're able to sell it, or you have to go and get some documents? You know, these are things you need to think about before investing in any property at all. And now to the fifth one. This is kind of linked to the fifth factor, which is cost of transfer. How much is it going to cost you to transfer your ownership of this property to another person? So this is also something that is very key to, you know, put into account when looking to invest in real estate in Lagos State. So the 5 factors to consider when investing, and these are like the 5 factors, like I said, I would judge if your investment to be a good one or a bad one. The 5 of them: the first is security of capital, the second is stability of income, the third is liquidity of capital, the fourth is ease of disposal, and the fifth is cost of transfer. So these are like 5 key things you need to, you know, critically dig into before you take any action on any real estate investment. I remain Jenny of La Vida, and if you've enjoyed this video, please be sure to give it a like and also subscribe to the channel for more updates like this.